Hello, everyone. Yep, you're getting live. Good evening, good evening, good evening. Hi, everyone. Welcome to today's session, which is all about education loan. I am Nikhil Jain, CEO and co founder at Foreign Admits. And today's session will help you understand about education financing, loan options, and more about how to get your education funded. Okay. I understand not a lot of students would get a lot of scholarship, but that should not stop you in getting a right kind of education. To get right kind of education, you would need certain kind of financial support, and who other than our current partner who will going to help you out in terms of getting the right kind of loan support. So we'll have a lot of discussion. When you're taking an education loan, there are certain things that you need to know, the do's and don'ts. What are the things that you can benefit in the education loan, how you can look towards your payback periods, ROI, and how you can still fulfill your dream of studying abroad with the right choice of education loan. So a lot of things that we are going to discuss. We have one of the very big loan lender joining us shortly. They are the ones who have distributed most education loans in India for a lot of students. They are pretty big as a company. They are very trusted and they have a great customer support. So they are just joining in shortly. So if you have any specific question on education loan or financing your education or understanding the ROI of your education loan, the interest rates, any specific doubt, do put that in comment. I'm going to get that answered for you this time, and you would not have any issues. Today we will discuss every step of education loan in a very thorough manner, and we'll also take up a lot of your questions. So if you have any questions regarding education loan, study abroad loan, the periods of installments, and so many things are there, right? Do not let your confusion pause you. Ask all your questions in the chat, in the comment section, and we'll take up all of those questions. Okay. So, yeah, and before we start off, I'm sure a lot of you are joining for the first time. So, this is one of the very special event of Mentor Conference, which is a 15-day event altogether. We have already gone ahead by 9 days. There are 6 more days. The last 2 days, 24th and 25th, is going to be the mega event. Yes, the mega event where all the top notch US mentors, UK mentors, Canadian mentors, European mentors, a lot of these mentors are going to be there, and they're going to guide you about your study abroad journey. So, we are going to have a lot of thorough discussions, mentorship sessions, SOP writing, resume writing, and different kinds of workshops on Canada, US, Germany, Australia, Norway, Sweden, Finland, and so many more countries. If ever you wanted to study abroad or you wanted to check whether you can study abroad, be it masters, bachelors, MBA, PhD, 24th and 25th, you should not miss it. I'm going to be here live for 8 hours with all the top influencers, mentors, specialists, and top-notch folks in this industry who are going to guide you about how to study in Australia, UK, Netherlands, Sweden, and so many more countries. So it's going to be a 2 day long event. So do not miss this. It is on 24th and 25th of July. If you have not registered, go to foreignadmins.com/mentor conference 2021. You would be able to find it out. If not, probably you are a part of our Telegram or Discord community. Do join them. So without any further ado, let me try and invite you to a very special speaker for today who's going to help you out with the loan process. Okay. Just give me a second. I'm trying to let them on joining. Meanwhile, keep your comments flowing so that it'll be easier for us to answer a lot of your questions. This is going to be highly interactive sessions, guys. So do not hold back with your questions. Let them come in. If anyone is missing out on any of our sessions, do visit foreignadmins.com/videos. You will get all the video recordings up there. You should not miss this session. But if you have exams or anything, do go to our website or go to our YouTube and follow us on YouTube. You would get all the event details right there. So you should not be able to miss any of those. Okay. So yes, we have one of the amazing speaker live. Hi Chandni, how are you?
Hi, great to be here. Nikhil, thank you for having me.
Thank you. Thank you for joining, Chani. So, to give a brief introduction about Chani, Chani represent HDFC Credila, which is one of the biggest education loan lenders in India, and they have been distributing loans to thousand. I would not say thousand, hundreds of thousands of students. So I would recommend all of you to invite, welcome Chani to the session, and let's have a discussion on education loan. So, Chani, can you give a brief background about HDFC Credila as an education loan lender and a little bit about your role in this? And then we can go ahead in the presentation.
Right. So, HDFC Credila, firstly, as most of you would know, is India's first dedicated education loan company. So, which basically means we're the first ones in the country who said we will only and only do education loans, because that's the kind of focus that we realized. That an education loan player needed to put in, to understand what is it that students going to various countries across the world need, what is it that the universities are looking at, what's a student's perspective, what's a parent's perspective, and then have products which are customized, and also processes in the loan, the loan application process, which is convenient. So that's exactly what HDFC Credla stands for, a very customer focused company, there to ensure and try and help as many students as we can in fulfilling their higher education dreams. Um, well, I have been with HDFC Credla for now 11 years, almost since inception of the company, and it's been a great journey here in being able to guide students through the process, and that's what I am here for today, to be able to tell students about the options of finance, and also to be able to understand education loan, because this is a very big decision that one takes. It's a large sum of money that we are investing towards education, and the way we want to fund this, and who we're going to for the funding, has to be understood holistically. It goes much beyond just an interest rate, and hopefully through the presentation today I'd be able to help them understand what are the features, how they should compare, and what are the key things they should look at while going through this application process. Um, so,
Interesting.
Nikhil, I'm going to probably request you to upload that presentation, because I'm having a little bit of a technical issue in showcasing it here. I've sent this to you. So, if you can help me with that, then I can get started. Um,
Sure. Yeah,
yeah.
I'm just trying to navigate where the presentation is.
Great.
Mm,
So, in the meantime, I will take everybody through what are these key features, and we will, I think, deep dive into all of these. So, mostly when we start looking at an education loan, or even education finance, probably one step before that, we look at scholarships firstly, which of course is a great option. But unfortunately, this is something which is not available to everybody. It's either partially available, or a very small percentage of students really get this. So that's one part. And of course, if you manage to get a scholarship, it's great. After that, the options that are left to you is either to be able to self finance through your savings or your parents' savings, or to go in for an education loan. So, even before we get into why education loan or what these features are, I think I'd like to, talk a little bit about how does this compare to digging into your savings and using your savings for education, rather than, going for education loan. So, firstly, when you look at an education loan, This is something that you pay back in tranches, in small EMIs, and that too after course completion. And there's a 6 months grace period that is given to students in case they haven't got their jobs. Um, so that is one point of comparison, because when you are self-financing, you're paying everything in a big chunk right at the beginning. So, all those savings go right there. Of course, it may be semester wise, so 50% maybe in the first year, 50% in the next year. But in the first, second year, basically, you've gone and funded everything and you've gotten paid up for everything. The opportunity to be able to take this on in smaller tranches over many years in the future goes away. And if a student wants to take on this responsibility on his own, then you don't get that opportunity if you're going to self finance, right? I mean, you're going to have great jobs in the future and be able to pay back for this with ease. And here is that opportunity to be able to do that. So earlier it was believed that education loan was only for people who did not have sufficient finances. Today, people are choosing this more for smarter reasons, like tax benefits. So your tax benefits are so good that it actually makes it one of the cheaper ways of financing your education as compared to anything else. The other thing is, the savings that you get on remittances. So today, if you want to send remittances across overseas, there is tax on it. TCS is about 5%. Whereas if you are putting the same money through an education loan, it's only 0.5%. So there is a direct saving of a 4.5% right there. So, these are financially smart decisions that you end up taking when you choose to take an education loan. And also, we've seen mostly parents are around retirement age at this stage. And, hence, this becomes an opportunity for them to save for their future while you take on paying for your future, your education, etc., through the future earnings that you will have. So this is one thing that one should keep in mind while making this decision, because education loan is not because of just a need, it is because it's a smarter financial decision. um, Now, coming to education loans, while the presentation's getting uploaded out there, Nikhil, I hope you've been able to find that. Uh, so, the key features that we look at when we are going in for an education loan, the first question that we ask is, what is the interest rate? And somewhere the journey starts and ends with that, because there is not too much beyond that that we know that what should we be asking to be able to understand that loan better. And there are so many more questions that you should be asking any education loan provider when that happens. So, of course, the rate of interest is important, and there are no two ways about it. It defines how much you're going to pay. But apart from that, one needs to look at things like how much of a loan is going to get paid. Am I going to be able to access it? What all is it going to cover? So, will it cover only my tuition fee, or will it also cover my living cost? And in most countries, your living cost is going to be anything between 30 to 40% of the overall expense that you will have. So it makes a lot of sense for you to have that as a part of your loan, because there are many other benefits like the tax benefits again that you can get on the entire amount and not just the tuition fee. And again, when you look at what are these living costs, your living cost could be on campus, your living cost could be off campus. All of that should ideally be covered, and that's what HDFC Credla does. We cover tuition fee, we cover living costs, whether that's on campus, off campus, even airfares to your university, because that becomes a big chunk of cost. There would be exam costs, there would be other accessories like your laptops, etc., which are necessarily mandated by the university. So anything that is connected to your education at that point becomes a part of your loan. So it's
Right.
actually covering the entire amount, and there is no upper
Great.
cap on this. One needs to check, is all of that going to get covered, or is there an upper cap where they will say, okay, we'll cover it but only up to 40 lakhs or 50 lakhs. So with HDFC Credila, for example, there is no upper cap on that. So that's another big thing that we look at. As long as you're eligible, you can actually have your entire cost, whether that's 80 lakhs or more. For undergrad, for example, you need much, much more than that. I mean, undergrad in a good university would cost you anything, between a crore and a half to two and a half also. So it's a huge chunk that gets
Yep.
covered out there. And
Great.
so that is one on the interest rate. The second, like I said, is on your whether that's the tuition fee, or and how much of the cost will be covered. The third bit is, now that you're going to go to a financial organization, some of them may say that you need to put still a certain amount from your end and fund that. Nikhil, if you're ready with the PPT, could you showcase that? So I'll probably take them
Yep.
through. Visually, I think they'll be able to relate and connect with this more. We'll just move 3, 4 slides ahead. So the next, we'll skip the next three. Yeah. So we've covered the expenses. Yeah. So this is where we are. The next slide on the margin money. So there is something called margin money, which is covered by uh, which is basically asked by a financial organization. So they will say that you need to put, say, either 15% or 20% of the entire cost that you're going to bear through your own pocket, and they will only fund you for the rest. Whereas with an HDFC Credila, for example, you do not have a margin money concept. So we basically don't have you put in anything from your end. As long as you're eligible, like I said, you can actually get your costs up to 100% or covered through the loan. To the next one. Now, this is a very important question. When should I apply? Now, most of the time, and many years back, the process that used to follow was that you needed to have your admit, you needed to have your admission confirmation, basically, or if you're going to a US, they call it a I-20, by the university if you were going to apply for an education loan. It is only after that that you could even access an application loan for a loan. So yeah, today things have changed. In fact, many years back, HDFC Credila was the one who understood that this almost becomes like a chicken and egg situation. If you're going to study overseas, universities want to have proof of funds. You are not sure where you're going to get your funding from. And then there is liquid funds that you need to put in your account. And if you need 40 lakhs, universities will expect you to keep at least 20% more than that as liquid funds, which is basically diluting your investments and putting it right there in your account. So it becomes like a difficult situation for people who are not prepared with having those liquid funds in their account, but they're very, very comfortable paying this in EMIs. So what we started was a process where we said that you can apply for a loan soon after you have got your scores, like your GRE, GMAT, IELTS, TOEFL, etc., and you have a clarity about which country, what course, what kind of universities basis your score that you're going to apply to. So students now actually apply to us much earlier in the cycle, and that's what we highly recommend. That as soon as you are in the preparation stage, you should start looking at what is the overall cost that you will approximately need. What is your vision? What kind of universities you're looking at? What are the average costs? So start your planning then. As your scores are out, apply for a loan, because that's the time we can evaluate with clarity as to what kind of university, etc., course that you are going to go for, and basis that a conditional approval is given for a loan. And that helps you through this whole process by pre-planning and being very sure about whether you will get a loan, how much of a loan will you get, and also showing this sanction letter, which turns into a solvency letter, as proof of funds to universities. And there is nothing better than this to show to a university, because here is a reputed financial organization who's saying, yes, I will be funding your higher education and by this much amount. So it kind of covers you out there. And if by chance you're not going to get a loan, you know that early. And if there is a partial loan that you are getting, you also know how much of that balance money you need to arrange for yourself, and you have sufficient time for that. So no more running around last minute after you've got your admits, wondering how you want to put your finance together. That gets eliminated when you start the process early. And we've now seen a huge chunk of students who actually do this with us, not because it's a lengthy process, but because it just makes so much sense and gives you so much more time later to be able to fulfill all the other paperwork and manage your visa work, etc. Next. We'll go to the next slide. So the solvency letter that we were speaking of, this actually has a lot of use because universities today are accepting this with ease. In fact, this is almost many universities become a preferred way of seeing your finance and the confirmation about that. If you go to the next slide, you will also understand that when you get a sanction letter, there is no legal binding. So it doesn't mean getting your loan sanction letter doesn't mean that you need to take the entire amount that has been sanctioned to you, because you may not know. Your one university may be costing you 30 lakhs, the other one may be 45 lakhs. There may be a third which is maybe a 50 lakhs, and you've applied for a 50, which doesn't mean that you need to take a 50 if that's what's been sanctioned. If you're going to a university which is going to charge you only say 35, then that's the amount that you can choose to take and not the complete amount. So that's one option that's available. In case students intend to postpone their plan, not go in the same cycle, then there can also be an extension to the validity of this sanction letter that we give you, as long as your basics of going to the university, etc., and which course you're pursuing, all that hasn't changed. So then we don't need to reevaluate basically your loan application. And once you get your sanction letter, that is not when the interest starts. Your interest starts only after you've taken a loan disbursement, which also happens in small bits, basically, because your university may ask for, semester wise fee or annually a certain fee. You may want your living cost only in tranches. So it's only then that, depending on the amount that you've taken, only on that amount that you end up paying the interest, and not on the amount that is sanctioned to you. Next. So tax benefits, I think this must be understood and this must be explored completely, because one, not everybody gives tax benefits. Not every organization is authorized to give tax benefits. So in fact, amongst the NBFCs, HDFC Credila is the only one who has a tax gazette, which means we are authorized to give tax benefits to students or to whoever is paying for the loan. So these tax benefits basically ensure that the entire interest amount becomes tax free, which basically means, for example, if you are taking a loan at 11%, then a 30% of, if you fall in the 30% tax bracket, which most people do there, this comes to just about 8 odd percent in terms as an effective rate of interest, and that makes it a very smart financial decision. Also, whoever is paying for the loan, whether at that time it's your parent or whether it's you, whoever is paying is the one who gets the tax benefits. So there is an option that your parents can still continue to pay for the loan and get tax benefits on it because they're choosing to do so. And initially, if you feel you don't want to pay for it, if you later switch and you're the one who's paying for this, then you can avail of the tax benefits. So it makes a lot of sense to check back. And if you go to the next slide, you'll be able to see what a tax gazette looks like. So here is on the right hand side of the screen, you will see this is a gazette notification. So everybody should be able to show this to you to show that they are authorized to give you these benefits. And this is a must check for everybody. Next. Loan eligibility is the most common question that is asked, that and that is something that you need to check on. How will the eligibility be firstly calculated? Because at HDFC Credila, we actually believe that it's not a one size fits all kind of a solution that we need to provide. It needs to be tailor made because every application is different. Your academics may be different. You may be going to the same university, but maybe the co-borrower profile is different, or your academics are different, and we need to look at it holistically. And if you only have one product, then everybody will end up either fitting the bill or not, and therefore lesser people end up getting a loan. So the process we follow is to basically evaluate holistically, which is to be able to see the student's profile, which includes academic profile, your scores, what university, what course, what country you're going to go to. In addition to that, if you take a loan from an Indian company, you also need to have a co-borrower on board. And this makes it very interesting because, sometimes the university you're going to may not be one of the topmost universities, but your parents can support you through this. And there is a co-borrower. The minute he comes on board, the co-borrower, there is an assurance that comes in along with it, and therefore the loan sanctioning also has a much higher chance. So with an education loan, a co-borrower could be either a parent, it could also be a blood relative like an uncle, a brother, it could be both. So this is something that we evaluate in their profile by looking at their income documents, KYCs, etc. And the third bit that we see is whether there is a security that comes on board in the form of a collateral. This is not always necessary. There are unsecured loans that are available. In fact, at HDFC Credila, unsecured loans up to 45 lakhs is available. But if you need a loan that is going to be higher than this, then a collateral security is required. So it's not always a compulsion, but it is advisable to be able to showcase whether you will be able to put a collateral on board or not. Now, contrary to what many people believe, the loan application process actually can be pretty simple. However, this must be on your checklist to see when you're going to any financial organization, because some do have a fairly tedious process. In banks, for example, you would need to physically visit the particular branch. You would need to, pick up a hard copy of application form, go give that back to them along with documents, and have that there are multiple visits that will happen that you will need to take. And honestly, in the current situation that we are in, the pandemic, having an online process is what works best. And even otherwise, in other situations, that basically eases doubt. There are many of you who probably are working professionals and planning to go for higher education. So given that situation, what HDFC Credila does within this is that we allow students to apply online. We have also now, during the pandemic, enabled submission of documents online. You can get your sanction letters, and now there is also the possibility of signing through e-signature your loan disbursement documents and your agreements, for example. So it's a end-to-end online process that you can have, and so many students have been able to get their loans with ease, even during the pandemic, even during the lockdowns, because of this process that we have there. So it's a pretty easy process, but yes, of course, a check back must be done to see whether if you are evaluating at that point whether this process is available or not with any financial provider. HDFC Credila, of course, has enabled that for its applicants. So the document checklist more or less remains the same with everyone. There is KYC documents, academics, income documents, collateral if that's being put on board, those documents have to be seen. So it's a fairly standardized list across. It's a comprehensive list. Most of these documents you anyways put together for your loan application, or sorry, your application to the university. But there are some additional documents that you need to add on for loan. So to see a comprehensive list, we have one on a website. So you can always visit hdfccredila.com to be able to see that list out there whenever you're planning to apply. Um, Now, many of you would be based in one city. You would probably be studying in one city, and you would have your parents in another city. And if there's a collateral, that may be in a third city. And this is something that kind of worries people as to how am I going to manage my application? I'm initiating the application here, but my parents are based somewhere else. But this is something so common that we actually have seen that for us it's been a very easy process to manage because we have people across, and so our teams reach out and make sure that even if the borrower, the co-borrower, the collateral are based in different cities, we make this a smooth process. This, of course, may not be available everywhere, but it is available as a process at HDFC Credila. And I think for years together now, we've been able to make this a very, very smooth process. So this is definitely not something that you should worry about. The other thing that we need to look at is whether there is, flexibility in the co-borrower, and that basically means that in some places you would only have parents who can come on board as a co-borrower. So, is there flexibility there that I can also have maybe a brother or a blood relative like an uncle, etc., come on board, and that definitely increases your chances, especially if the co-borrower as your parent is not really fitting the bill. So this flexibility has enabled many more students to be able to take a loan from us. Most importantly, in this whole process of taking a loan, because this is a fairly large chunk that you need, especially for higher education overseas, looking at how convenient it is going to be for you to be able to pay back. Now, if you're going to have a repayment tenor of only 5 years or 7 years, you're going to have big chunks of EMIs to be paid in your initial few years of work. And we realize that the growth in salaries happens over time, and so if you have a longer period to be able to pay back, this makes it very easy. So a lower EMI means a longer tenor, and HDFC Credila gives you a tenor up to 15 years, now, which also means that you do not necessarily need to opt for 15 years. If you're confident you can pay in a shorter duration, there are shorter tenors which are assigned to you. And there are many students who end up also paying it in an even shorter tenor. After a few years, they realize that, it's very comfortable for me to be able to pay back and close my loan in a shorter duration. So they do that. However, many keep it for those 8 years till which time you actually get those tax benefits. So, because the tax benefits are so attractive that nobody then wants to close the loan until you have actually availed the complete benefit, which is available for 8 years. So overall, loads of advantages of going for an education loan, and HDFC Credila makes sure that while all of these things are, accessible to you in terms of features of the loan, we also have very attractive rate of interest, and we customize that. In addition to this, we realize that you're going to go to another country. You're going to have different time zones. You're not going to be able to make a call to us and say, hey, I need this, or I need this certificate, or I need another tranche of disbursement to happen. So there is a web enabled billing and servicing system that we onboard you onto. So it's very convenient. With a click of a button, you can get what you want and connect with us. So, you don't need to then worry about time zones, etc., or reaching out or making a call to having your work done. So it's a very smooth process, end to end, from beginning to end. And also through this whole process, there is a dedicated relationship manager who hands hold you through the process of application till the very end, till you get your disbursement. So it's a smooth process. At any point you have a question, there's somebody to go to, and he'll answer that for you. A quick one on this, because this is unique to understand. There are loan companies that are Indian loan companies, and then there are some who are, foreign loan companies. So, for definition's sake, because I'm defining that as say a dollar loan company, a non-INR loan. So one needs to compare these, because sometimes one may just look at a couple of features and then not understand how this really works out overall. So, firstly, Indian loan company like an HDFC, for comparison's sake, here gives you loan, which is, doesn't have an upper cap. Whereas in dollar loan company, not only will there be upper cap, but they will only cover tuition fees. So your, other expenses, your like your living costs, etc., won't get covered. There will be a higher processing fee. Your interest, how that is calculated, can really make a big difference to the overall interest that you are paying. So if there is a reducing balance, which basically means as you keep paying to the company, the balance is only what you are paying your interest on, the balance that is left to be paid back. Whereas in a flat rate interest, it is a standard one rate that you need to pay. Even after you've paid say 80%, you'll be paying interest which is calculated on a flat rate, which becomes much higher. So through all these features and the fact that an HDFC Credila would give you tax benefits, whereas through a dollar loan company you will not get tax benefits. The TCS on loan would still apply. So when you look at all these features financially, taking a loan from a Indian company like an HDFC makes financial sense for the benefits it gives you. And the next slide will actually show you a little calculation, which will also, where we've also incorporated what happens when there is a fluctuation in currency. Your INR versus dollar fluctuation happens year on year. So when you look into all of these, and when you have to pay back in time, it gives you a big saving by taking a loan in INR. So this is a calculation basis, everything that I was just explaining to you. In fact, the TCS on loan is not incorporated here. That's an additional 4.5% saving that you make by taking an education loan. So this is something which is rare to find as a comparison. So I thought we must showcase this to you so that you understand the loan end to end and your options. So overall, there are multiple features, and thankfully we, ensure that there is a tick against HDFC Credila and all these features that are available. If we go to the next slide, you'll be able to see that there are also other benefits, like I said, web enabled billing system, dedicated relationship manager, a lot of flexibility in the overall loan. And not just this, the next slide will show you how there are multiple benefits, up to actually now 1 lakh rupees that we have collated through offers on products which you need to invest in and buy before you go and take your journey to the other countries. So things like air tickets, or your calling cards, or vaccinations, or couriering your forms to universities, and etc. All of these kind of offers, apparels, and lots more is something that we have put together so that you can also make additional saving on all of these. So this goes as a special value added thing to all the applicants who apply to HDFC Credila. So it's been an interesting, journey within HDFC Credila. Our aim always is to have happy customers who've had a satisfying journey through us. So just to showcase how this has been. And I hope through this session that we've had, one, you've understood the loan. And I hope HDFC Credila can help you through your journey and for your finances in the future. I'll be happy to take any questions that you may have for me.
Perfect. I think this was very elaborative. There are a lot of questions now coming in. Let me stream you one by one these few questions. So, one question by Rohan Paul: what is the different components that are considered as collateral?
So there are mostly two options that people usually go for. One is a collateral, which is in the form of FDs that you can put against the loan, and the second is basically home paper that you would have for either land or an apartment or a house that you would have, but not commercial property. This needs to be of a residential kind that you can put against a loan.
Okay. Um, so this is, and ma'am, what is more right to get a loan from an Indian company or the company from the country we want to go? How do people look at towards it? Because there are a lot of nuances that people say, if you're going to US, you need to take a loan from a US company. Is it a mandatory thing, or what are the benefits that people get if they are taking a loan from an Indian company, let's say like SDFC Credila?
So, so there are three parts to this. One is that if you are, say, a US citizen and you have access to loans from them, then that becomes a separate option of being able to get a loan from US directly as a citizen, right? And that does work out well for some people, but unfortunately, it's accessible to very few. So for those who do have it, can always explore that as one option. The other part is that when you are in India and you do not have access to a US loan, for example, then there are other companies that you explore. So it could be an Indian company or a non-Indian company. So within that, like I said, I've showcased the benefits of taking a loan from an Indian company versus a non-Indian company, basically. And it makes a lot of financial sense as I showcased through the calculation and through the features that you are getting, in terms of whether financial features or whether even getting a complete coverage of your loan. There is also evaluation for your loan that is done one time with the Indian loan company, whereas the other dollar loan companies will, maybe evaluate for your first semester based on your performance. They will reevaluate, so you may not even know how much of a loan you will get for your second year, and if you will. So it puts you in a situation where you may not even know how you're going to fund your second year, and that cannot be, obviously very comfortable for all. So apart from the other features, these are a
Absolutely.
couple more that one needs to consider.
Okay, so there's one interesting question by Komal. So thank you, Komal, for asking this question. How to plan the EMI? How long should we pay off, opt to pay off? Also, please explain the trade-off between paying huge sums to avoid paying more interest versus paying over a long term to reap the tax benefits.
So, firstly, when you're taking a loan, you've got to evaluate how much you will be comfortable paying back with ease. And the option of getting a longer EMI, longer tenor, sorry, gives you the opportunity to take a larger chunk of loan, and therefore to probably be able to go to better colleges, if case in case that is something that is curtailing that decision. So an EMI is something that we calculate basis your repayment capability. It's a calculation that we do at our end. Earlier, for example, we used to offer 7 years. After some years, we made that 10 years. Now we feel the loan amounts are getting bigger and bigger. And basis our experience, we're seeing that students are finding it more comfortable to pay it through a longer tenor at times, or are more comfortable taking a loan which offers at least a longer tenor. So because you don't know what your future is going to be like. So I think it makes sense to be able to opt for that, and you always have an option in the future if you're earning enough and you're comfortable enough with the kind of savings that you have to be able to close your loan at an early stage, or prepay in a chunk at some stage when you're comfortable. So these are options that are available to you. So about applying early, when you get your GRE scores, but how about the scholarship, and then what's the right time to apply? So, you're going to apply for your scholarships and probably get to know later. There is no harm, like I said, to apply for the entire amount that you need. There is no compulsion for you to take the entire amount. You anyways will not know, because every college, every university has a different cost structure. So I think it makes complete sense to apply early and then know how much of a loan you can get, and then make a decision at a later stage once you know whether you'll have scholarship or partial scholarship or no scholarship, as to how much of a loan you will finally be asking us to disburse to you. So definitely makes sense to start early. Sorry, you're on mute, Nikhil.
Yeah, I think I just want to add from a student perspective here to Rahul. Scholarships are very uncertain, though they are, because I myself have been full funded scholar. But on the other side, my co-founder, he didn't got the scholarship. He took a loan and then went inside the university and gotten more scholarships. So if you're just waiting for the scholarship, you might risk your dream admit. So instead, get your pre-evaluation done. Understand if you are getting eligible for a loan or not. If yes, then how much of a loan are you getting? So getting that safety net built is very, very important. Once you have a clarity that okay, this is out of 50 lakhs you're getting eligible for 40 lakhs or 45 lakhs, then you can probably work around your ways to arrange that remaining 5 or 10 lakhs, because it might bite you if you are getting a loan and still because of certain delay issues you could not go ahead because of the balance amount. So getting to apply to a loan early would help you to build that safety net so that you don't miss out on your dream admits.
Absolutely.
Okay, so this is one question that has been asked by Ankita. Can you please confirm the maximum amount that can be sanctioned as an unsecured loan? And what is the difference between secured and unsecured loans?
So, firstly, I'll answer the second question first. So, secured and unsecured is giving the security is, like I said, by offering FDs against your loan. So, you put that as a security against your loan, or documents of either property, land, apartments, houses, whatever, which goes again, as a document with your loan, saying that this is going as a security. So it's basically a security you giving to the loan provider. How much of a loan can you get is up to 45 lakhs. So unsecured, if you're not giving the security, you can get up to 45 lakhs unsecured loan. Uh, if you need a loan that is going to be a higher amount, then you need to give security. But the good news is that your security doesn't necessarily always need to be equal to the loan amount. It could, be of a lesser amount, marginally lesser amount than your entire loan that you're taking.
Interesting. Okay, so there's another interesting question by Rohan. If my co-borrower is situated at a different country during the loan application or sanction, does SDFC multi-city feature work?
Well, a co-borrower needs to give the documents, and a co-borrower today needs to. So earlier we needed a co-borrower to come in, sign a document. Today there are e-signatures on agreements which are available, right? So technically, we don't see that as a hindrance, because I think the world is becoming a smaller place with digital technology coming in. These are not very common situations where parents wouldn't be there in the country at all during the loan process, but if they are giving their documents to us, then that becomes a easy possibility. Yes, I mean, the hard copies of the documents at a later stage should be available, so they should be able to share that. And now that the signatures can be digitally done, I think this is becoming a simpler process for sure, and it's going to enable this also.
Okay, so I think this is a very repeated question. So this probably might be the last question. So does SDFC Credila, make the loan like a unsecured loan up to what amount, and what is the difference between the interest rate between the secured and unsecured loans from
So this is
SDFC
a
Credila?
good question. The first one, I think I've answered, that the unsecured loans up to 45 lakhs. Um, So sometimes there is an option for you to choose whether you want to give security or not. It's not necessary of with the loan, but it is an option. And in such cases, when you do give the security, there can be a chance that you will get a little lower rate of interest because you've given the security there. So I think it's a great question that you asked, Devansh, because yes, it does benefit, and therefore it benefits to declare whether you can give a security or not, and then explore while the process of the loan is on. Whether it's really necessary. Is there an unsecured loan available? That option available? So these are questions that can then be answered by the loan representative for you.
Absolutely. Guys, will if you guys have any issues or any questions regarding this, do comment over it. We'll definitely share these questions with the SDFC team and they would respond to you. If not, you have registered for a mentor conference, you can directly get in touch with us on the group and we'll help you out on that. Just okay, this is very interesting. So I'll just take two more questions because I think these are very interesting questions. We should get this answered. So Ankita is the second last question. Sorry, Rohan's is the second last question. How much deferred moratorium period that we have while the student is studying, and how much interest rate would occur during the moratorium period?
Do you offer deferred payments on moratorium period while I'm studying? How much interest? So basically, there is a moratorium period. Like I said, your study period plus the grace period that is available. And we sometimes also encourage students to be able to pay for the loan during the period of the loan, the period of the education, because that kind of takes a burden away at a later stage. So you're basically paying small chunks of just interest, not principal amount. So we encourage students to do that because it definitely eases out the repayment.
Great. Okay, so one interesting question is, okay, so one someone has WhatsApp me a whole long conversation about a question that they wanted to get it asked, but I will simplify it in a very small question asked by Divya. So can I
Yeah.
get a loan even if I don't have a co-applicant with no ITR or no collateral? So how do you, because there are people who are meritorious, but their parents or the siblings are farmers or doesn't come from a representatively higher background, but they do have certain financial stability.
Yeah. So the co-borrower, profile definitely has to be considered while we're giving a loan, and no collateral, yes, becomes an option because unsecured loan is available as an option. But a co-applicant profile has to be considered, and honestly, it's a balance between the applicant and co-applicant's profile that we need to make. So there is no one right answer for this. We definitely need to consider the co-applicant profile, but also sometimes the applicant's profile is so strong that we the co-applicant profile is not as important to be a very strong one, but things, basic documents like your income documents, your ITRs are essential. It's essential as a part of the loan for us to be able to evaluate and see. Otherwise, there is no way for us to gauge the co-borrower's profile completely.
Absolutely. Guys, ITR is a very essential document. If you or your parents or your basically co-applicants are not filing it, request them to start filing your ITRs because that is a way to understand your credit worthiness or how much of your credits have, tax paying ability could have been or your earning a potential could have been. So I will not take any jargon terms because I'm not a specialist. Probably you guys should get in touch with SDFC Credit Law and they are the
Yeah.
guys who can help you out with your planning needs also. And talking about I-20, I'll just take this question. I-20 is basically a form which helps the given by the college, which helps you understand what is the exact loan amount for at least for the first year of education.
The I-20 actually, Nikhil, is the admit. So in US, they use, it's a common terminology that is used across the nations, where they call the college admit as, like
Oh,
you've got your admit now, whereas US uses the term I-20, which basically means you've got your admit from the university. So yeah, once you have the I-20 is when earlier the application process used to start, but yeah, now that's that doesn't make any sense.
Okay.
Yeah.
Perfect. So I think we have come to the end of the session. Thank you, Chandni, for joining in, and thank you for sharing so much of insights about education loan. I'm sure a lot of questions are still going to come because education loan has been a myth for a lot of people. But then, thank you guys for joining in, and all the guys. I'll try to ensure all these questions reach to you guys so that you can help them, clear their doubts. Thank you,
Yeah.
Chandni, again, and thank you, SGFC Credit Law
Thank
team, for joining.
you. Thank you so much for having me here. Thank you.
So, guys, we have come to the end of the SDFC Credila loan session, and SDFC Credila has been one of the pioneers in the education loan because they are the ones which has very high market share in terms of education loan disbursement. So certainly their team is pretty big, and they are accessible at multiple cities, states, towns, even some villages also. So you can always trust them and have a conversation with them, and they can help you out in terms of the loan process. Okay, so I'm going to share with you something very interesting about the education loan. Do ensure that you have check this out, and you would have a very clear idea about how SGFC Credila can help you out. So, guys, do not leave the session. The another session is getting started right now, and it's on financing, personal finance, forex, and remittance. Because loan is one part, then financing is another part. How you are going to manage the money? It's still live, starting on Foreign Admits YouTube, LinkedIn, Instagram, LinkedIn, Facebook. So do join us quickly on the other session. I'm jumping to the next session.